Hello, clients and friends. This is Billy Doty from Doty Financial, and it's my pleasure to present our economic and market update. First of all, I want to say we have done 3 videos prior to this one about tax planning. It was a series on tax planning, and we just found out that our email system failed to get those to you. We did send them out, but evidently they all bounce back. So when you get this, you will probably have been bombarded with 3 video workshops just prior to this one. So if you hung in there and you're watching this one, I hope this one is informative as well. Okay. Today's agenda is very straightforward. First, I will share with you a brief economic and market update. Then, we will discuss some proactive guidance moving forward. Before we begin, it is always important to review that there are 5 key areas of financial planning. These areas are preservation planning, retirement planning, tax planning, estate planning, and investment planning. As a comprehensive financial services firm, we try to always consider the impact of any recommendation we make on not just one, but all of these areas for our clients. Today's presentation will be primarily focused on investment planning and equity markets. At our firm, we partner with clients and believe an educated client is our best client. While we will always try our best to help you when it comes to your finances, we believe that knowledge is power. One of our missions is to share with clients any knowledge that can help them make an informed decision. Looking back to the start of 2020, seems like 10 years ago, investors have had a most unusual ride. On February 19th of 2020, the Standard & Poor's, or S&P 500 index, closed at a then all-time high. Sadly, without warning, when COVID first became a worldwide pandemic, investors saw a 30-plus day decline of over 33%, which finally reached a bottom on March 23, 2020. For those who did not panic, good news arrived on August 18th as the S&P index rallied to a new all-time high. Fast forward to late April 2021, and the index, despite major volatility, again made all new all-time highs. Interest rates continue to be in the forefront of our watch list. With vaccinations being distributed and the economy on the rebound, the Federal Reserve offered an improved economic forecast during its March 2021 monetary policy meeting. Despite the predicted upward trend in the economy and inflation, the majority of Fed Policy Committee members remain steadfast to keeping their key federal funds rate at or near the 0% rate they moved it to in March of 2020. They cited 2024 as the first year they anticipate rate hikes, noting that the Fed needed substantial further progress toward employment numbers and price stability before they could raise rates. Safety comes with a cost. Have you seen what interest rates banks are currently offering to savers? According to Barron's, the average bank money market rates on April 19, 2021 were 0.07%. And the average 12-month CD rate was 0.18%. At a rate of 0.18% without taxes, it would take over 350 years to double your money. For many investors, today's low rates might not help them reach their goals. Therefore, equities could be a part of your diversified portfolio. This past quarter brought investors many tempting distractions. Media magnification is a powerful force. Sensational headlines can leave investors overwhelmed, stressed, and confused. Our objective is to help you carefully create and follow a strategy with realistic financial goals. Veering off course in the hopes of short-term gains could potentially compromise the financial fortitude of your long-term goals. Call us if you have any questions about your path, and please contact us before making any sudden moves. Also, your personal health is imperative, and stress doesn't help. So let's all try to stay healthy. An essential factor when selecting the types of investments to include in your portfolio is your time horizon. This is the amount of time you earmark to reach your goals. An investor that can commit to a 10-year time horizon can review different choices as compared to someone who needs to use that money in 6 months. Investors should always try to match their portfolios to their goals and time horizons. This could help them keep the big picture in mind and hopefully curtail any distractions caused by short-term developments. This is something that we enjoy helping my clients with. If clients are focused on their long-term goals, we can help manage any anxieties caused by short-term market noise or volatility. Our goal is to help clients avoid making impulsive investing decisions. Another key investment factor that you can control is your risk appetite, or the amount of acceptance that you have for risk. We want to emphasize the importance of keeping your focus on what you can control versus what you cannot. As this illustration shares, you can control your risk, your time horizon, and your behavior. Although many investors focus on outcome or investment return, that is something you cannot control. Reviewing your risk appetite to see if it has shifted or checking to see if your time horizon has changed is always important. After you fully outline or update these two foundations for your investment strategy, you can then match your behavior to your investment plan. Thinking long-term is still a great way to look at equity investments. Typically, the most successful investors think and act for the long term. It's nearly impossible to predict exact market movements. However, you can prepare. Equity market volatility is still present. Equity market downturns or declines are a normal part of the investment experience. Now is an excellent time to move forward with confidence in the path you've chosen towards your investment goals. But remember, equity markets are currently high, and we always alert clients that we need to proceed with caution. Recently, President Joe Biden said that he was going to recommend some changes to tax rates and laws. While nothing is currently approved, this is something we will be watching closely, and we will keep clients updated and informed as things progress. The SECURE Act was passed in late 2019, and it changed how retirement funds were transferred to heirs. To try to offer our clients better flexibility on minimizing taxes on their retirement funds, we will be discussing with clients, where appropriate, the strategies that come with designating both primary and contingent beneficiaries. Another proactive planning topic we want to be watching is that in March, Senator Bernie Sanders filed a Senate proposal called the 99.5% Act. This proposal was to reduce estate tax exemptions from the current level of $11.7 million per person to $3.5 million per person. The estate tax rate under Senator Sanders' plan would start at 45% and grow to as high as 65%. This is a proposal we will be closely watching, and as things develop, we will be updating you and talking with clients that could be affected. As a quick recap, here are some key points. Despite continued volatility, equity markets in 2021 have started on a high note. Interest rates are expected to remain low for the foreseeable future. The economic recovery is still largely based on vaccine distribution and reduction of COVID-19 cases. A new administration brings new changes and proposals. Also, caution and diligence are critical. Please avoid distractions that sway you from the path to your goals. Focus and make sure your time horizon and risk appetite are congruent with your goals. And as always, call us with any concerns. Legendary long-term investor Warren Buffett's business partner, Charlie Munger, said, "It's waiting that helps you as an investor, and a lot of people just can't stand to wait." So, what can you expect from us? One of our main focuses is to review changes for our clients on an ongoing basis. You can expect regular communication, more frequent discussions, and you can expect that we are continuously reviewing economic, tax, estate, and investment issues for our clients. In fact, we'll be offering other workshops that highlight tax changes and planning ideas. We appreciate our clients. As a client benefit, you can add names to our distribution list for viewing this workshop. We hope you will take advantage of this and add 2 names or more to our list. One of our goals for 2021 is to continue to help others. Some of our best clients were referred to us by existing clients. So please feel comfortable letting us know the names of anyone who you feel could benefit from our services or information. Again, one of our primary goals is to keep clients informed, and we appreciate you watching our update. Please call us if you have any questions. We're thankful for the opportunity to assist you with your financial needs. Remember, at Doty Financial Group, our clients come first, and your health and well-being is our highest priority.